What a day to tell you guys that I blew my funded account. Now, in my heart of hearts, I honestly thought I was going to be the one to pass it first time. I thought that my shit didn't stink, and that's the exact reason why I actually ended up failing. Do you know what? Roll the clip. Okay, guys, this is in real time. As you can see, price is still moving, but I just want to give an idea as to how I look for my subs, how I take my subs. So in here, what we can see is we can see a bearish order block. This entire thing would be a bearish order block. These green candles leading up to the down move. And we're seeing price retrace back into those bearish order blocks, right? On the 4-hour time frame, right? We want to start from the high time frames and work our way down. So then when we drop into the hourly, what do we see? We see this sell side imbalance and this green candle right here, which is a propulsion block. Now, if for those of you who have done the ICT core content, you'll know that propulsion block is more sensitive, right? So then price is more likely to key off of it. So this is a bearish propulsion block on the hourly time frame. Now, we use the Fibonacci to mark out the three up candles leading to the down move on the 4-hour, and so that we have reference of where our mean threshold is. Ideally, it shouldn't cross our mean threshold if we're going to respect the PDA. And then when you drop into the hourly, you can see that the reason why it may not approach our mean threshold all the way is because we have this propulsion block, which is more sensitive. Now, for extra context, I thought that New York was going to be a reversal because obviously we're heading into an opposing higher time frame PDA, right? And that's when you can expect, during New York, when it runs up there, you can expect it to reverse, right? And I was correct, but there were still some things that I just wasn't privy to. From there, we can drop all the way into our 1 minute. Why? Because now we're just waiting for the market structure shift to show that we're going to respect that PDA. As you can see, the time, which is very important, the time is 8:04, right? The time is 8:04. And we were just consolidating after making a range upwards in London. Now we're just consolidating, and we've now broken out of that consolidation, right, to the upside, taking the buy side liquidity, and now we are waiting for price to create a market structure shift, breaking these lows here. Once that happens, it will leave behind a fair value gap, right? And the 8 to 8:30 consolidation will consolidate, ideally, if this is an ideal setup, which I've seen time and time again, it will consolidate just below that fair value gap. Then when New York opens, it will retrace into that fair value gap, and that will tag us in, and then we'll target a 1-hour downside bullish PDA, which I'm saying would be over here. We're in the trade here, guys. Keying off of this fair value gap right here, and price is dancing dancing inside on the way to my stop loss. Right, guys, update. I did get wicked out by spread, which is, as you can see, very annoying, but I just re-entered with the same risk. So I entered with 1% and I re-entered with 1%. And the reason why I didn't mind re-entering is because I understood that the trade is still valid and it didn't hit my stop loss. It's just like unfortunate with spreads. So yeah, that's why I re-entered. And as you can see, we're at 18 past. You can see that. So now we're just waiting for news to come out and basically melt price, I hope. Now, update, news did not melt price, news melted me. So how did I end up blowing the account? I took another position. I know, I exited when price was slightly in profits because I saw that it was actually consolidating, right? And if you've been watching my recent videos, you know that what I like to see is I like to see a consolidation above or below the fair value gap, depending on whether or not we're going long or short. And then, and then it taps into the fair value gap, and then we go on our way for the sniper entry. But
what I was seeing is I was seeing that I was actually in the consolidation. So that's when I exited and took a small amount of profit, and then, move my position to get tagged in where the fair value gap above that consolidation was. That got liquidated too. And I was absolutely just on tilt. And the reason why I went on tilt is because I didn't understand why I got liquidated there. It just didn't make sense to me. Is it one of my statistical losses, or is it just something that I didn't understand? And the answer that I'm glad to actually say, it was the latter. I didn't understand. Before this, I'd never actually seen anything other than already being at the higher time frame PDA and consolidating until we create a market structure shift, followed by more consolidation, and then a tap into the fair value gap for the cipher entry targeting our opposing objective. Basically, what I realized was every session has its own accumulation, manipulation, and distribution cycles. London has its own, New York has its own, London close has its own. Those three, they all have their own A and D cycles. Now, if New York is already at the higher time frame PDA, or London close is already at the higher time frame PDA, right? Or even London, I've seen this in London as well. If it will just consolidate and then take either buy side or sell side of that consolidation and then start making the range, right? But during, let's say, when it's not at the PDA, right? When it needs to still get to the higher time frame PDA, the news that will come out will manipulate into the PDA and then make the true range. And that's exactly what happened in this example. It manipulated into my Fibonacci levels, respecting the 50% retracement level on Tuesday, and then it just melted. And yes, that's when, my bias was right. I knew that New York was going to be a reversal, but I got impatient in the 90th minute because I thought that my shit didn't stink. But I'm very glad for the lesson, and I'm very glad that I could come and actually share this lesson with you all, so that you guys don't fall victim to the same trap that I did. But all in all, this was a valuable lesson for me. This was a very, very valuable lesson for me. It's going to aid me in my challenges to come in the future. And yes, I am going to take another one at the start of next month. And because of this lesson that I learned, I think I'm going to do a lot better, actually. Especially when trading New York and London close, because I didn't know that this could happen. And, I've been robbed like this of a setup during London, and I didn't know why. But New York allowed me to find out, and that's been very useful, immensely useful. So the plan is we're gonna get back on the horse come May. We're gonna get back on the horse of the funded challenges, and you're gonna see me pass some funded accounts and even get a payout. If there's one thing you can take from this video, don't allow the markets to lay down with your money. Get your get back, but don't revenge trade. Don't revenge trade, but get your get back. Use your edge, use your statistics, and let the probabilities play on your favor. Ready?